The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host, once more into the breach, dear friends. So what do we have happening today? Oh, I forgot to say. There's something that I forgot to say. That is that we always come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
So the S&P's up 1, the Nasdaq's up 13, the Dow's down 40. And, you know, we had dubious news. We already knew that China was going to do something. That kind of came out with what they were going to do. The big thing is it's a lot of saber rattling. I was unsure why the market, at least in the pre-market, acted like it did. But the liquidity is nothing. That means if you want to come in right now, even during the trading day now, the liquidity is incredibly poor in the S&P futures. No one wants to put any kind of real orders in. So you get kind of a very light movement in the market. And it's kind of easy just to have somebody come on the TV and say something or blow his nose, and suddenly the market's up or down. We, of course, started much lower. We went back up to, what, 26.18, I think it was, on the S&P cash. I'll look again in a minute. And we were doing pretty good and got into lunch. And Jeffrey Grundlich, he's a nice guy. Just got a name that I never can really get a good grab on. He puts out a lot of presentations, a lot of interesting thought. I don't know how accurate he's been. He may be very accurate in the bond market. His stuff is well thought out. He's not a Kramer, and he doesn't seem to be talking his own book a lot. But I'm not going to say that I bet the farm on what he has to say. Grundlock. Is that how? Okay, Grundlock. Anyway, he came out and said his real name was not Grundlock, but Henny Penny, and the sky was falling, and get out and run and run and run because the stock market's done. That was what he said, and the markets kind of came back, what, 10, 13, 14 points on the S&P cash after that. That's kind of going away. Like I said, we're back up. I think, I can't remember. Well, I'd have to go back and look at the den. It looked to me like the setup was that everybody was going to continue shorting this market, especially the NASDAQ, through every level that it went higher. So at first, I didn't know about this. I didn't have the TV on, don't have it on. A lot of times I have it on just to make sure that the ticker on the TV matches what I'm seeing. I still live in fear from the early 2000s where the ticker would violently lag on things. And I still reliving my early days as a trader when that would happen and drive you nuts. So I always have it. I seem to always have it on, not for what's on there. And I hardly ever listen. I put on the closed captioning. So, you know, it's got a little less impact. News is all about, pretty much for me, is all about whatever they say. Is that a lie? And if that is a lie, how can I use that to make money in trading? I'd say 98% of it is either worthless or a lie. And if the lie is big enough, I like that because then we can figure it out. But and probably make some money off of it, because some people will be sucked in. They won't think about it very much. They'll say, you know, those are the droids we want. Oh, anyway, so looking at this, we're back up to the resistance levels. I just kind of see kind of a feedback loop of short, go a little higher, short, go a little higher. But just watching a lot of the ticker and the movement and the short trades so far this morning, I said that the NASDAQ looked to me like this thing really wanted to go tag 7,000 today. So that's just 45 points higher. We're up 15 now. I think that could be very easy on just short covering. Maybe it doesn't stay up there for the close, but I think we're going to probably get fairly close to tagging it. The question is just how many people pour back on and cover at the end of the day. So we'll be looking at that. Only about 98%. Yeah, there's actually 2% that's good. It's kind of like mining for gold. 98% is some kind of rock and 2% is gold, and it's hidden in that rock, and you may have to distill it, beat it with a hammer, and then get it. But yeah, gold is gold. But gold just doesn't come and dripping out of the rock for you. You have to kind of go after it. Anyway, there's always some interesting discussions. He's been on this kick for probably 6 months of saying the end of the world. I read the transcript real quick. He's fairly bearish. And I can understand why he is bearish. My thoughts, though, is that the charts just don't back it up. We aren't getting the volume to break this. And, man, I looked for it. I couldn't find it. I was talking to one of the fine ladies of the den. And there is kind of this April-May thing where the market really just broke, like on the 29th of April or the 1st of May. We debate on whether it was 2010 or 2012 or 2013. It was somewhere in there. I'll go spend some more time and find it. But, man, this was one that you could see winding up all the way through that April time frame. The market went higher, retested a previous high and lighter volume, and that was it. And if I'm going to be bearish, I want that same thing. I want the whole month of April to be up on light volume, go out, test some highs. Well, right now, all we've done, that's speculation. I can tell you what we have done, and that is we went down to the February 6th through 9th lows in many of these stocks. I'd say 80% of them. And we did it with incredibly lighter volume. Now, there was some big volume in certain stocks, basically the FANG stocks. Those are linked with ETFs to other stocks. So you got a lot of movement, but overall you didn't have that much volume. We went through that yesterday. In fact, I'll show it again here today. But volume again yesterday didn't do much when they tried to push this market down. Seeing the same thing today. Did we opened up lower? Should have seen a bunch of volume. I've been talking about how I now use the CBOE U.S. equities market volume summary, which is basically tears down volume into tape A, B, and C and secondary markets. So you can literally see all the different markets and all the way these things come back up to the total volume. We basically have about 4 billion shares right now. Yesterday we did in the low sevens for the total by the end of the day. In fact, we talked about it a little bit a week ago, where the volume in the New York Stock Exchange just doesn't exist anymore. Maybe we've reached a tipping point where the NYSE is literally nothing. It's all electronic trading. And this is, I think, a lot more accurate, looking at the volume for everything and tearing it apart, depending on which tape it's on. Anyway, we'll talk more about this when we come back. Looking for a U-bottom, and I think this is kind of it.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger King TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And if anybody wants it, just email me a path at TFNN for my email, and we'll be more than willing to send you a link here for the CBOE volume. But I think that's what you should be looking at now. I think that the floor traded volume just doesn't matter anymore. You know, it's just not one of those things that truly, do I have it here? I had it somewhere. Nope, it's gone. Had something up here. Okay, so that's just kind of it. And we'll talk more about it, but keep a close eye on it. Well, there we went. We bounced to 26.25, 69.79 on the NASDAQ, looking for 7,000 by the close. And again, it's just how many times people want to take a beating. There's the old joke of the guy that goes hunting in the hunting and goes after the bear, if you know that joke. I certainly can't tell it on air, but the punchline is the bear finally talks to the hunter and says, you're really not coming here to hunt, are you? And if you know that joke, you will get it. But that's it. Anyway, up a bit. S&P is a little harder for me to see for where the next stopping point is, but NASDAQ certainly looked to me earlier that this thing, you could just kind of look at a handful of these charts. So we'll get a look at that. Anyway, let's get started with a little bit of history. Then we'll start looking at some charts. I've got some emails already. You can give me a call at 877-927-6648.
Then it's all just a little bit of history repeating.
On this day in 1994, 19 years to the day after Microsoft was formed, Mark Andreessen and Jim Clark create the Mosaic Communications Corporation, which will later be renamed Netscape Communications. Andreessen had developed the Mosaic web browser while working at the National Center for Supercomputing Applications. I was working in that town, and he was part of my computer club in 1989. 1988 and 89. Thinking those were maybe 70, as early as 1987. It was 88. man, if I don't write a chronology down of my life, I think it's all going to drift into nothing. So I'm going to say that this story is a mostly true story. The years may be kind of fading in and out on me. Anyway, Mark Andreessen was a very talented, I think, grad student at the time. And I was working for somebody that was selling all the software and hardware for a particular brand of computer that I loved. And it worked very well, way years ahead of its time. And of course, didn't ever make it, mostly because of poor leadership. Anyway, knew Mark Andreessen. Think I even went over to his house a couple of times. We never became good friends. After I left, he continued to work on that, create Netscape. I remember he was kind of talking about this in around 1990, 91, about what he wanted to do. I didn't have any internet connectivity, didn't have a lot of other stuff, was basically a modem guy. So I couldn't really see the wisdom of the opportunity of the World Wide Web. I knew they had it at the college. I knew kind of how it worked. He had terminals. We went to the college occasionally for the computer club, and they would show us stuff. And then later on, in, I'm going to say 1996, it's going to be probably around that time frame, I bumped into Jim Clark, who at that time was the CEO of SGI, Silicon Graphics Corporation. And the work that I did instantly after leaving Urbana, Illinois, led to a lot of products for television and Hollywood for special effects. And of course, SGI was all over that. They'd done the yeoman's work and starting real CGI work with the dinosaur movie, which was kind of interesting. Some people may have seen it. Jurassic Park. Anybody ever heard of that movie? Anyway, they did a lot of work on that and other movies, Terminator movies. Everybody was wanting to use a Silicon Graphics machine. It was the only thing that really worked fairly well. I was working on the opposite side of that, which was PCs for special effects in Hollywood, get the cost down. My claim to fame was always kind of the first digital hard drive recorder for animators, which made it a lot easier. Took the cost down from $5,000 to about $2,000 for 30 seconds of video, for digital video, which really in the early 90s was kind of hard to get. You could destroy a lot of tape machines in the meantime. So anyway, met Jim Clark. He invited me out to not only his deal, but a 2-week extravaganza that SGI put on at Stanford. Like a lot of the big technology companies, they basically went after the people that went to school there and hired them. And a lot of these professors like Jim Clark, just went off campus and started their own businesses, which he did. And I had a very nice conversation with him, talked to him for a while. And he basically told me that if they didn't go ahead and decide to license their operating system like Microsoft, that they were done. I said, well, I'm glad I came out here and spent 2 weeks. I did learn a lot about computers that I didn't know at the time, especially mini and mainframes, a lot of the stuff that they were working on, stuff that was going to come out in the next 5 years at a much lower price point, or at least that was my idea. I was going to go out and try to destroy the markets with the cheapest products that could be made that would work, because this stuff was so expensive. A lot of people in their basements. But Jim Clark gave me a heads up, so I didn't end up building anything for SGI, although I had a wonderful Indigo machine, if anybody remembers that one. That was kind of like the baby SGI. I had it on my desk for about a year till someone called up and the CEO found out I had it and decided to give it to somebody else. But on this day in 1994, they started Mosaic. And I think it was 2 or 3 weeks after I had that conversation with Jim Clark out there. He was gone from SGI. and on to bigger and better things. He was tired of people telling him what to do. Went on to have 3 or 4 more big companies underneath him. A lesson. And of course, Mark Andreessen, the biggest vulture capitalist on the road there that all the venture capitalists are in. If you didn't know it, if you ever went out to California, all these guys are on a 1-mile road. You can literally get in your car, drive 2 minutes, and be to the next venture capitalist and be that. We'll be back. We'll talk about a lot of other things, get into some charts. Got some emails already. Try to answer the rest of it. Be back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, the NASDAQ's a little bit ahead of schedule. We're up 50 points on the NASDAQ. I did some day trades out of this morning, and I was looking for that as the number. So I'll have some of my trades, at least for the day, go off at that. I figure they're going to be lining up to short the dickens out of it at 7,000. Question is whether or not they can make that stick. I was pretty sure we're going to get to that 7,000 on the NASDAQ. Didn't have the same kind of clarity on the S&P, but It's up 13 points, still good. Anyway, we've been beating out a U bottom for about a week. And I thought about it this morning. I'm thinking, you know what? We've seen this in stocks, a handful of stocks. But everybody, I think, is in the last 7 or 8 years has been programmed for V bottoms in the market. We just stay down for a minute and go straight back up. No, I don't think anybody knows the kind of beating out a bottom, especially in the market, since QE all started. And this is like a day. This was like a monthly, every couple month event, both in stocks and in the regular markets all the way through the 2000s and before. So I think this is the market acting a lot more like the market. The old thing was let Bill Clinton be Bill Clinton in the 90s. Wasn't that the saying that everybody wanted to say, just to let him be himself? I think the market is actually starting to act like the market again after all the skews that we're in from 7 years of molestation by the government. And we're starting to get this market acting like a real market again, which is nice. Anyway, when the NASDAQ hits 7,000, I'll be out of my day trades. I still have a ton of long positions, actually even added one of the bigger trades that I had this year and was able to get back into it at a very good price today. It's up already and out of the danger zone of coming back at us. But I'm pretty much 100% invested here now. So we'll see how this does. My continued guess is one of two things happen. Both of them start with us going up through the at least the 20th, if not the end of April. And at that point, that volume and the way that it goes up in the character will tell us whether or not that we sell in May and go away. We shall see. I will not predict that. I will not anticipate it. I will wait and see. But I'm pretty sure on that next 20 days or so, you never know when a rogue nuclear weapon will go off, a dirty bomb, but you can never tell. Anyway, I got some great positions this morning and in the last few days, added some more. So all looking good, all looking good. Okay, so what else do we have? The first one is a question about Adobe. Is it okay? Yeah, it is. You kind of got back to this level of consolidation, or about 212. That's about where it was in. I would have much rather seen this thing come down to 204. As many people asked me in the last few days, I think a lot of people are fighting last year's war. And that goes back to the theory that in World War II, all the French generals were set up like they were going to refight World War I. All these guys were old. They didn't think very much new, and they didn't know what to do when Hitler ran across them with mechanized divisions. When they had horses and carts still, didn't make a lot of sense. So what are we looking at here? I think sector rotation, a lot out of these FANGs, out of the traditional stocks that had the big run, especially up into the end of the beginning of this year, maybe even a little bit after. Will they go up? They probably will. But I think the big money movers are not going to be the ones that did well at the end of last year. It's going to be the ones that can finish their consolidation that maybe were the hot stocks a couple of years ago. And now they've kind of based out, and now they're going to be the big new runners. Now, you can think about which companies those are. I have. But my guess is going to be they're going to be companies that are not affected a great deal by the dollar. They're not going to be affected by tariffs. They're not going to be affected by swarms of illegals coming across the border from the south. They're not. Everything that you see in the news that could possibly affect anything will not be probably why these stocks do better this year. So if you're looking at them and you look at the headlines, why would they do better than they did last year when they did nothing? And a lot of times it's just rotation. But keep an eye on them. I think, we've seen the IWM do very well, as the people thought that the dollar would go to hell in a handbasket, and it hasn't. It's kind of found its life right around here for the dollar index around 90. And for every attempt to push this up through 92 and down through 88, it's kind of failed. My guess is that the government is getting a handle on this and starting to nail this down. We don't see anything in gold that really gets it out of this trading range of about, what, 1310 to 1355. It fails at the highs. It fails at the lows. Could we have another year of consolidation in that? I wouldn't want to be in gold one way or the other until we break out of this, and I'd probably fade the direction that we do break out of. So we will see on that. Oil, you thought it would do a little bit better. 63.32. It's just hard for me to see that every time oil goes up a little that they don't turn on a few more wells that actually get productive at that price point. So a lot of stuff going on. I think a lot of people are fighting last year's war, or World War I and World War II. And I would just think maybe look at changing the name. They're not going to do bad. I just think maybe you might be able to do better on different stocks. So just some thoughts out there. Give me a call at 877-927-6648. Email me at path@tfnn.com. And, of course, always put a message in the den. So let's start looking at some charts out here. Let's go through a little of them. YUMC, I really wanted to see how this one did this morning. The reason why, of course, this is Taco Bell and Kentucky Fried Chicken in China. The question was whether this thing, after all the issues, would be able to hold the $39.38 low from February 9th. $4.34. Probably couldn't be a bigger stock out here to show the wrath of China inside of China. And, you know, 39.38. So where are we at right now? Well, we're at 39.24. So we're pretty close. I would probably keep a very good eye on this one, because if it closes above 39.38, that's telling you something. I think it's going to tell you that there's not going to be the level of rancor. Remember General Rancor? What movie was that in? Spy Hard? Was it another one of those James Bond ripoffs? General Rancor. I think that was a guy in Mayberry RFD, wasn't it? Matlock? I think it was. Maybe someone will remember and email me during the break. We'll be back in a minute.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks. Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Well, the NASDAQ got to 96, got to 69.96. And we saw the shorts were right there. Probably a few people wanting to sell before they hit those shorts. So we're going to probably have this little feedback loop up here, and we'll watch it. But I suspect that we close at 7,000 or above on the NASDAQ by the end of the day. You just have these repeated assaults by the shorts, and probably a few people getting out of their long positions, and that's it. So we'll keep an eye on it. We're up 13 points on the S&P at the moment. But we'll be back up there soon enough. And somebody asked a question about what the options look like, and that's one of the reasons why I've been fairly bullish throughout all of this. Besides testing lows on much lighter volume in a lot of stocks, which we'll get to in a minute, just a great deal of the options continue to show much higher, and I haven't seen them really try to get around that. I'll show you the chart here right now. So, I mean, we're probably talking, you know, could we get 100 points up off of today's low? I think certainly on the SPYs. The options certainly show one of the more beautiful expiration patterns that could have us up to 272 on the SPY. So do we have to get all that in one chunk? No, but that's what's always made me think when you see patterns like this, they tend to work out very well for the option market makers. And that generally means that there's going to be some decay, but I'm looking for at least 270 on the SPYs, maybe even more if people keep shorting. And so we'll see how that does. Options expirations on the 20th of this month. So we'll continue to look at that. Some of the other stocks that we're looking, well, yeah, 7,000 on the comp can happen. But I said that 3 hours ago. So I'm still looking for it for my, oh, we're almost there. We're back to 69.97. So we're almost there. I'll listen for the beeps on my trading computer to say that my positions went out. So I'll let them have it here. This was the trade I looked at and the plan I had before. Maybe I'll go back and change that plan later. But just for my day trade, I'll be willing to take this and take the money and run. So what do we have going on here? Yes, I had the NQ. Okay. So what do we got going on here? Abel Marley. This one, as we said, for a couple of days, has been toying around these lows. $90.49. We got to 86.75 today. $90.60. So we are back into the trading range on this one. 5.7 million shares to how much today? 1.7 million shares. Yesterday, 1.8 million shares. So we're getting a lot of tests on light volume. We may need some consolidation on these. But if you're short, you got to be out of these. I can't imagine being long many of these stocks. A lot of these had false breakdowns. And this is making me think a lot more bullish even into May. The reason why, when you get these false breakdowns on light volume and they just don't repair in a day or so, you generally get the weakest of the hands out of these markets. And that means that you then have, generally a month or so. But this kind of beating out a bottom, these U bottoms, tend to be a lot longer than V bottoms. You get a V bottom, you're out of it, and that's it. You get a U bottom, you get the weakest hands out. So the people that would sell maybe on the way up, they're out. You don't have people without conviction in U bottoms. U bottoms give you a V bottom. Maybe you could sit on your hands for 30 minutes while you're losing money. But in a U bottom, you got to sit on your hands for several days or even a week, like we have across the last week. And that's incredibly hard to do. And that's why these bottoms tend to be much more lasting. You've wrung out the weakest of the hands. Alaska Air Group, I think we talked about this on Monday. January 20th, $59.25, 10 million shares. You went through it with 3.5 million shares on the second. You get, 4 million shares yesterday. And you get just 1.2 million shares today. Probably not going to be a huge success, but at the same time, if you're looking for tests of previous lows on lighter volume, that could be it. So what else do we have going on here? We're at 2630 on the S&P, up 16, 17 points on the S&P cash. Okay. Oh, yep. Someone says, yeah, I was posting this in the den. Lennar came out with earnings this morning and had a huge push. As I said when we went into these, I wouldn't have gone long on it during this trade, but these housing stocks look pretty good. Now, Lennar, if you listen to them, the reason they did good is they bought another company that had a lot of properties in Nevada, Texas, and in Florida, and that's where the business has been and still is. And that's why Lennar did a lot better. I can't remember the name of the company. It was a smaller one. But they had a lot of business. They were able to send some of the people in the weaker parts of their business down here to Florida and Texas. And these guys really got on it in that new company that they bought. And apparently it's doing very well. Anyway, huge short interest. In fact, let's take a look at what it was. LEN. Okay, you had 3 days to cover. It's not bad. My guess is that you probably had a lot of people shorting this going into the last couple of days, but it looked fairly good. There's a thing out here, and that is, you were testing this 8 million share low in Lennar on February 6th. 5606. You went through it just a couple of days ago and only on 5 million shares. I think that would have been a clue for you that you probably, if you were short housing, you probably wanted to get out of it for a little while. You probably want this thing to kind of come back up and get 3/4, maybe a 782 retracement back up into these highs for Lennar. And if you're thinking that interest rates are going higher, which I kind of think I do, question is, how much are they going to affect housing prices? And, could it get back up to 67, 68? I think it could. And get hit 72 again? Maybe not. But you might have a little bit more out here. And maybe after a few more interest rate hikes, maybe this takes and forms some kind of ABC in the downside. Bank of America has been bouncing along this $29 range. You've got 155 million share low on February 5th. So what does that tell you? That's, you had basically two of them too. You had one on February 9th and you had one on February 5th. So you got about 150 million shares. You get into it with half the volume on April 2nd. And man, if you're short these things, you got to cover on light volume tests and wait for these things to set up the next ABC on the way down. But I didn't understand the idea of camping on these and getting all bearish at lows. I'm bearish at highs and scared at lows that my short position may go away. Anyway, we'll be back after this.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
There are 5 reasons traders and investors fail to spot bear markets. It's a set of 5 very specific patterns that have preceded every bear market during the last 130 years. I'm Steve Rhodes, author of Mastering Probability and the #1 market timer in the nation as ranked by Timer Digest for the S&P 500 for the last 3, 6, and 12 months. You see, timing is everything. And on Wednesday, April 11th at 5 p.m., I'm going to share with subscribers exactly how to time the next bear market. Look, the last 3 bears averaged a decline of 49%, which means you've got to earn 82% just to make your money back. Wouldn't it be easier to avoid the next bear market altogether? Sure, countless experts tell you that markets can't be timed, but what they're really saying is that they can't time the markets. So let me teach you how. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guarantee trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Don't let that next bear market eat your porridge. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we got the market barking up here at the highs, 26.31.78, and by special request.
Don't you knock it off with them negative waves? Why don't you dig how beautiful it is out here? Why don't you say something righteous and hopeful for a change?
Always with the negative waves, Moriarty. Always with the negative waves.
And markets go up, markets go down. It's just, today's one of those days where we can say, let's not put out those negative waves. Let's just let the market kind of tell us where it's going. And for me, as we said, I think it's kind of going a little higher here for a while. Maybe it goes lower, but I think that's going to be the end of this month, not the beginning of this month. I wanted to
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.